That way you don't have to repeat yourself again, Denise. So what we did is we went to home, we went to reporting, we logged into Edge, we hit default. So that's important. You go into the branch tab and then you do branch performance dashboard. So those are the
Yes.
steps that you need to take. We do
Yep.
funding date, and then do we want to do it for the date range? Is that the right date range?
Or do you want to just look at June? Do you want to just do 1 month?
What do you think, Denise?
Have you done anything with your June P&L yet?
No, I haven't.
Then let's go with June. Let's do June.
I mean, to me, June, we could have June now, right?
Yeah.
Yeah.
Yeah, I just finished June last week, so June
I would
would
like
be
to. I would like to look at June because I hadn't looked at June in about 7 days, but we were set to make a good profit in June.
okay.
And unless something showed up way differently in the last like 3 days of the month, no,
Which it should not.
should not.
You know, once they hit the
We were-
15th of the month, you should be done.
Yeah, we were set to make about 92,000 in June.
Very
What
good.
I'd seen last. Right, we had a good June.
Good.
Which
Okay,
was
so I've
gonna,
got the funding date set up, 6/1 to 6/30. For training purposes, it is much easier just to click that. So then you
Yep.
can just choose it rather than doing the scroll bar. All right, and then I'm gonna hit this
Are you
button here,
sharing-
and then I'm gonna hit
sharing your
download.
screen? Share
Can
your
you
screen,
share,
Jack.
Jackson?
Oh,
can't
good
see
point.
anything.
Thank you. I thought, thank you.
You recorded, but can't see.
Okay, so for recording purposes and training purposes, so Denise doesn't have to repeat herself. You choose the date range here.
Yes.
Rather than doing the drop down, we made to make sure this is funding date, not lock date. We then click this button here, and then we go to download, and we go to crosstab. Are we all caught up now, Denise?
Yep. Yep.
Okay, cool. So I'm gonna download this report. It comes in over here. Open it. Okay, what would be the next step, Denise?
So the next thing that I would do is I would add 2 columns next to, okay, put your column B and format it as a number. Not a good chair for you, Mom. I know. Have it? There you go.
Okay, got it.
Okay. Don't sit in that chair anymore. I'm sorry about that.
No worries at all. You're totally fine. We're all working from home and get it. You said add 2 tabs somewhere?
Yeah, move over. I think it was after the P, after column P, but move over so I can,
After column P?
yes.
Got it. Okay, so I'm at P, which is volume.
Yeah, so after the lock price, so not
so
after
that'd be
P's.
After
There you
Q,
go. Yep,
add in 2 more.
add in 1 more.
Okay,
And in column R, you're going to make a formula and you're going to put in equal. Go down to row 2. There you go. Equals. Click on Q2. Minus 100. Okay. And then
Did it go all the way down?
well, wait a minute before you take it all
Okay.
the way down. I'm going to save you a step. So then
Okay.
you go into cell S2 and you will put another formula of equals P2 times R2 %. Enter.
did I do the percent wrong? You said percentage sign, right?
Yeah,
Did I do something wrong? Oh, no, actually, I guess it's right. It came in negative.
it
10,000.
is.
Okay,
Yeah.
perfect.
Okay,
Okay.
then you would highlight both R2 and S2. and then drag it down. Copy both columns at the same time.
Brilliant.
Nice.
Okay. So that's your plus and minus par in column S, which should be, that amount should be taken and covered by your discount points. So if you made 92,000 in that month, you did pretty good. Because if you look, you've got a lot of,
We got a lot of missing.
So we have a lot, so then would it be better to even add in a column here to show the difference between the discount point and this number? To see
I
where
mean,
we-
for your own reference, yes, you can do that.
Because you're saying,
Ugh.
in essence, yeah, because I was seeing that much red, I was like, that doesn't look good, right? So it should
Right.
be, wait a second,
How
Did I-
you
I did-
doing? Switch
You
it.
did it backwards.
Yeah. there we go, all right. So now we can see how much
that's
money,
Still backwards. Still backwards.
Yeah.
Sorry, that's wrong. Yep.
Wrong.
okay, what do
So
you
it
want me to
should
do?
be like,
It
it should
should
come
be-
out to like 8,200 or something.
No, you need to do.
Oh, it's
discount
because it's a
plus.
negative, it's a negative, I need to do
do a
plus.
plus.
Plus. Do a
That's-
plus.
yeah.
There you go. There you go.
Yep.
There you go.
Thank you.
It doesn't look correct though. There's no way we have that many consistently that we're not charging the discount point.
Well, scroll.
But looking down
scroll-
towards the bottom, look down
Yeah.
towards the bottom.
Yeah, we have a lot that are.
That are zero.
So it looks like there's some that were done correctly, but so in essence, everything in red was a pricing exception, right?
Now the thing is here's what I think what could have happened there too on some of those bigger ones is, so let's say we do current client pricing or brand
Done.
preferred pricing. You know, you could, if you did current client, that's 100 basis points that was taken off the commission, but that might not be showing up there. So what's the best way to show that portion of it?
Well, Denise, what would you say is next? We were kind of jumping ahead, right? So,
Sorry.
Yeah, I mean,
Uh.
what I would do from here,
the biggest offenders were, it looks like Harden, on Varencamp, Marcel Miller,
Oh.
Santana, Whitney Kelly on Biggs.
See, that
Whitney
was
Kelly,
probably
Garrett,
Marcel.
Ullman.
That's probably Marcel's.
I mean-
One that was the
So my
second home
thought
one.
is we don't start analyzing individual deals on this call. We focus more on putting together the spreadsheet the correct way, and then we can do an analysis later.
Yeah.
But if we start analyzing, we're going to lose a lot of time.
Yeah,
And we
keep
only
going.
have a certain amount of time with Denise right now, so we
Yeah,
need to
go ahead,
focus in on.
Denise. Yeah.
okay, would you mind giving me
Um,
the
Control.
steering wheel?
Yeah, absolutely. Yeah. So I'll stop sharing my screen and then I'll let you go. Sorry.
Well, you would have to, I don't know if you can share and then.
So
I
Jackson, I'm
can-
wondering if Jackson, it might be easier if you email over that spreadsheet to Denise. She can
Would that
open it
be-
up and then share her screen. Because I think Denise, if you use the control, it's a little weird to use and you're going to go a lot slower. But I think if you just email it over to her real
can't
quick.
hear you.
Denise
Yep,
Bowman, right?
Can I just
Yes.
do this? Can I just share it with her? So then as she makes edits, it goes on mine as well?
Yeah, that's great.
Hang on,
It's perfect.
let's do that.
Okay, so hope you're gonna send it to her. I'm not gonna do anything.
Right.
But the formula stuff I already did.
And I followed you.
Oh, you did? Okay, good.
Yep, and my numbers look the same. Sorry,
Okay,
Denise,
great.
it's just slow with us being
that's
on.
okay.
Happy birthday, Newton. While we're waiting.
Thanks, bud.
Yeah.
Appreciate it. I may have to in about 30 minutes or 20 minutes, head out from my current location, so I'll do this from my phone from there.
What are y'all doing for dinner tonight?
Benihana.
Oh, nice.
Nice.
You're not doing, I thought you were doing medieval times. You
Not
don't
anymore,
do that.
buddy.
You don't do that anymore?
Not since I hit 30 years old. I can't do it anymore.
Hope, have you been able to share yet?
No, it's given me a save to the cloud. I've never seen that before, so I'll just email it to her.
Okay, so you're gonna email it, Hope? Okay.
Yeah.
Sorry, Denise.
No, that's
Yeah.
fine.
Oh, clunky.
Just looks different. All right, it's on its way.
Okay.
All right, it's in the sent file, so
Yeah, I've got it. I have
Okay.
to convert it from the format that it's in.
how do you do that? You want to share that so we can see?
Oh, it's just because it wasn't sent over in Excel. It was sent over as a Unitext. I gotta figure out where I put it.
Yeah.
I'm gonna jump back on my phone.
I don't know, Clara. I just don't know. I get it. I can do. You can't help it.
Yeah, it's not going to convert for me the right way.
I did not see an option to send it as.
You would have to save it as an Excel file. So go there and do file save or file save as. There you go.
Top one?
There you go. Now you can send it. I'll be able to open it.
Okay.
Perfect. Okay, can you see it now?
Yes.
Okay. Now we can go forward. So then the next thing that I would do is I would be trying to match the YSP, the yield spread that's in the P&L. And I hide a lot of columns because I just don't want to see them.
Since we're recording it, do you mind just saying which columns you hide?
Oh, sure. So the loan purpose, while it is important, we don't necessarily need it for this. So we'll hide that. We need the loan officer. We do not need the loan officer or the LO assistant or the processor or the lock date or the lock expiration. So we can hide all 4 of those. Manager, let's see, manager PE note log, we don't need that, or the month of. It just, to hide those columns just makes things much easier and manageable. Oh, come on. And the formulas that were put in earlier didn't carry over to this worksheet. So I'm just going to put those formulas back in column R and S.
That's wild.
So in column R, it would be the lock price minus 100. And in column S, it would be the volume times the plus or minus par %. And then I would just take this all the way down, copy it all the way down. And then when you want to start analyzing things, then you can add in that extra column after the discount points and find out what your difference is. And how much did you actually do a pricing exception on? So now you said that all of your loan officer margin is the same. It's just that some people are paid differently and other people get overrides on the ones that are different. Am I right?
That's correct.
And what is your LO
Correct.
margin for everybody?
150 basis points.
So I would make a column then with the LO margin at the end. And then we're going to figure out how much the loan officer is going to be paid on these loans. So we will take the volume times the LO margin %. And then we're gonna find out what the branch has made. So the formula here is going to be the total margin minus the LO margin. And then you're going to do the same calculation as you did in the LO margin. Well, that doesn't look right now, does it?
So our Holden and Newton, our conventional margin's 265, our government margin's 280. Is that right? Or
No. No,
It's a-
our conventional margin's 130 basis points. Our govy margin, I believe, is 210 or 220.
it's with what it says 2.65. I guess, am I missing something there?
That probably is adding on, that should be adding on.
Adding on
maybe the LO part.
Yeah, but then if our conventional margin, you said it was 130 or what? Sorry, what is it?
Well,
Yeah, I believe it's
130 plus
130.
150 should be 280 for conventional. And we should be
370,
370 for Govy.
because that's the 150 plus the 220.
Yeah.
Mhm.
Well, I'm seeing 360 down here.
Yeah, that's what I was trying to kind of
We
reconcile.
did change, we recently raised the Govy margin by 10 bips, right, Holden? So some of those
No.
older ones,
I mean, this is for the month of June.
I know, but Holden, I think, requested to raise from 210
But
to
wha-
220.
But why are
Within
all
the
of our
last
loans
month.
at 260 or 280? So that doesn't make any sense.
Depends on when it's locked. Your rate is going
You
to
may-
depend on
well-
when it was locked.
Because we did have, now, I don't know how long ago some of those were. Depends on looking at them, but we should only have a handful. Like, let's say we locked a loan back in March.
I mean,
that
but
didn't close.
almost every loan is at 265 or 28, it looks like.
265 and 28. Well,
That can't be right. Or, I mean, well, I mean, conventional, I guess, 280,
I know
guess,
we
no, that makes sense.
changed. We changed conventional margins.
It's
by 15
government should be
bips.
280 and our government should be 360, conventional 280. So I'll forward you guys the email.
2.2, if we see 2.65, that means that the lock was done before we had raised the margins to 15.
Yeah, there we go.
bips.
Okay,
Yep.
that makes more sense. All right, I'm following. Keep going, Denise. I was trying to reconcile that. That's all basically all conventional. It's just some of those were
Yeah,
locked
see,
before we made the
that's what I'm
change.
saying, you have to look at when they're locked, because the rate is that you're being paid is going to be as of the lock date. So let's see when the lock date on some of these were. So you got 610, 7, 630. See these, do you have a max?
Yes, we should have a max comp in place. I think it's
Yeah.
8,000
It's-
for some of the loan officers and 10,000 for the branch manager, right?
Yeah.
Okay, that's why some of these. See, that's why some of these, the branch margin looks weird. Is because they are over the max. Now,
I think those are, yeah, all those deals. Holden, remember we were talking about the jumbo deals with Camp where there's supposed to be a cap, but there wasn't put a cap on Holden's override on those deals. I
Well,
think, right?
it's not mine. It's anyone who did a jumbo.
Yeah, anyway, you're right. Yeah. Yeah, it was just more that you have more jumbo loans done on your team. It happened to Newton too. So okay, we can keep going. I
No.
think.
So
uh,
the LO margin on a jumbo, is that different?
The yellow
Or is it
margin is
just
not,
max?
it's the same, the max comp kicks in. However, each one of us have MLAs on our team that
Yeah.
we get an override on, and there was
Right.
no max comp on our override. So that being said, is let's say we get a 50 basis point override on an MLA of ours, and an MLA does a $2 million jumbo. There's no cap. So we're getting a $10,000 override on that $2 million loan. And that was throwing things off a little bit. We found we just have changed that. But
So we
there
got that
needs to be a cap on the branch, like the override from MLAs when they do jumbos. So.
Okay, so Denise, keep walking us through in essence how, like, because I mean, what you were showing us was like, hey, we calculated how much the loan officer makes, then we were calculating how much the branch made. So it looks to me that on that one formula you were doing, that was a loan that was locked previously, where the conventional margin was a little bit
Yeah, that
lower.
one was locked on 310.
2.65 minus. So that was the conventional margin was at 115 then at that point.
Yeah, so we changed the margins on April 11th.
There we go. That makes sense. Yep. So, okay, so we can keep going. So the next step when you're kind of building this out so you can review it each month is we calculate how much the loan officer made. We calculated how much the branch made. What's kind of that next step in the formula for kind of, putting this together?
Well, the reason that I'm doing all of this is because I want to know, or want to make sure that everything has been paid correctly and that it goes back, it balances back to the yield spread that's showing on your P&L.
Okay. Okay.
Now, I don't know. Obviously, these are jumbos, but if you look at the branch margin, a number here, the 1.22, that's not even 1.5 for the loan officer. And again, I get it that you're gonna max. So let's see.
Yeah, what's the loan? Okay, so that's Baron Camp, so I bet that was a jumbo.
Yeah, it's a
So
jumbo. It is.
8,000 is your max.
Is your override holding 50 or 33 bips on Baron Camp?
33.
I think it's 3167, isn't it, Holden?
3160.
Yeah.
Okay.
Yeah, I was just rounding.
Okay.
Okay, so pay no attention to what I'm doing here.
Yeah.
Okay, so that loan officer was paid 0.48, was paid 48.78 bips.
And what was the loan size on that one?
1.640.
Okay, that makes sense.
Yeah. But again, is there a max? Do you have a max on your branch?
We should not have a max on
I
our
believe-
branch, but I'm very interested to see if we do.
I thought the branch margin, max branch margin was 20,000.
Is it? That's a great point. So what are you seeing that we do have a max, or it looks like we have a max, Denise?
Yeah, because if you look at this, here is your loan officer max of the
Yep.
8,000. And it's saying here, that's what your branch got paid. So if you combine the two of them, that's your 20,000.
That should
Now,
not be the case. That it should be 20,000 on top of
could
that.
there have been a pricing exception on that one? Can you tell?
But
Oh,
your
it doesn't look like
pricing
there
of,
was. It looks like it was very small. Because it was locked at 99.959.
yeah,
So yeah, that's a problem. So we should be getting more margin on that, or more branch margin.
Is that
Yeah,
what you see, Denise?
100%. We should be. It's a
Yeah, I mean,
10K max to a loan officer and it's 20K max to the branch. So it should not be a 20K max overall. It should be a total of 30,000 total between
well,
the two.
28,000.
Well,
28,000?
that's if it's going to, that was done by a junior loan officer and their max commission is 8,000 or 8,300.
Okay, I just
Oh, it's
emailed
8,300?
them to find out if there's a max on our branch margin for jumbos.
You said
And,
it's 8,300?
It's
For-
8,020.
8,020 for our junior loan officers.
All right, Hope,
then
can
we-
you write that down as a takeaway? That way we just kind of can keep moving forward.
Yeah, because we should definitely be getting 20,000 to the branch on every jumbo.
Yeah.
Like as the max cap. And
This
if
is already
they're-
this is already very helpful, Denise. Thank you very
Yeah,
much.
incredibly. Thank you, Denise.
So we're going to then just copy this one.
But it changes. Different loan officers have different amounts.
Okay.
So 5 of my loan officers would be at that amount. And then 2 of them are a little different.
You guys are always making trouble, aren't you?
I know it's a progression. So
Well,
what
we
happens
took
is,
it. We took this from Rick. This is the
Yeah,
Rick's model of
it's-
the MLA. You know, so
the MLA gets paid a certain amount of comp, and then when they become like a loan officer, they get a certain comp, and then if they're a branch manager, producing loan officer, they get a different comp. So
Yes.
it's kind of those stair step up, and so your max comp is set as a percentage of what your comp pays.
Okay, so the max comp in, let's say, our Michigan office for a loan officer is 175 bips. For a junior loan officer, they would get 125 bips. And then the senior loan officer that manages that junior would get the additional 50 bips.
Yeah, that's exactly how that's very similar to what we do.
And then the MLAs will get 50 bips. Their senior will get 50 bips. And the branch gets the 75 bips because they are covering the higher base pay. Make sense?
yep.
Yes.
So we're we're very similar in that on every loan, it should come out to 160 basis points when you add up. So let's say the MLA gets 53 basis points. The sponsoring loan officer or the person there above gets the override of, so basically, let's see. Okay. Sorry. So like,
The one thing I don't understand is why do we have an LO margin of 150 then? Why isn't it 160?
it's always been that way.
I
Since we
understand
came
it's
over
always
to-
been that way, but I just don't understand why it is that way.
Yeah.
No, it'd be worth revisiting. I agree, because we basically just chose to take a loss. I think what happened was that was a discussion we had with Todd Screama at the time when we raised it. Was that we were
Yeah, I
choosing to-
understand that. I just don't. I feel like then
Well,
in that situation.
hey, for the
if you're
sake
getting-
of Denise,
All right,
real
yeah,
quick, I
we'll
just want to
sidebar it.
help her understand, answer all her questions. So we can write down these questions to talk about between us later.
Cool.
So, but what I want to help you understand, Denise, is basically when you take the like you were saying, the same way that Rick's group works is you have like an MLA or junior LO, and then they have the sponsor who gets the extra comp, and all of it adds up basically to 175, right? Is
Okay.
that correct? That's the same way ours works.
Okay.
Yeah.
With the max also, or you're saying your seniors get more and therefore you're going to be paying out more than what you brought in? You said that your seniors are unlimited on the
Yeah.
override?
So basically the only seniors, quote unquote, are the 3 of us.
Right.
So all of them come up to us. So basically the we get the difference. So like, let's say for our junior loan officers, they get 103 basis points. And then we get an override of, was it 50, say whatever adds up to that 160. So the problem comes in when we have a jumbo loan, is that there's the override the max comp does not kick in. So like I was saying earlier, if let's say the sponsoring LO is getting, an additional 56 basis point override on a $2 million loan, and we only got $12,000 in branch margin, that sponsoring LO just got paid out more than our entire branch. So we recognize that as an issue. And so we've talked, Corbett, about adding that to our comp agreement to where it caps out that. And that's what I was talking about earlier.
Yeah. Yeah, because otherwise you're going to be paying out more in commission than what you brought in.
Yeah, exactly. So I think we've now gotten it adjusted, but unfortunately, we're pretty far into the game now. And so all of these will fall under that old system.
Now, see these jumbos and the ones that are maxing out, you have to basically go one at a time and figure out what the LO margin is by taking that max. Now, if you look up here, I've got your max at 80/20 divided by the volume on the loan times 100, and that gives me what the LO margin is being paid so that we know what the branch is also being paid.
Okay, and you do times 100 to put it into basis points?
Yes.
Okay, great.
Yeah, and for some reason it always comes up and puts it as $1.
Yeah.
So I reformat it to a number.
Just general. Yeah, a number. Okay.
Make sense?
It does make sense, yes. So, okay, great. Yeah, I mean, so if you look down here, it looks like a normal conventional loans, like see how we have 2.8 down there?
Yep.
That looks right. It looks like, okay, we're collecting right. The ones before that at 2.65, those were probably locked prior to our margin change, is my assumption.
Yeah, see, those were locked. Let's see.
Oh, no, actually, oh, that's funding day.
3/3. March 3rd, March 21st,
Yeah,
March
okay.
9th.
Yeah, so those were all locked prior to that. Okay, now, and then anything that's below that, so these ones that are like 2.0 for branch margin, let's see, why is that? Okay, those look like jumbos.
Well, that's because they're over the max again.
And those are jumbos, okay. So now I just got an email back from corporate saying that there is a max branch margin of 20,000. Like Newton said, but the question is here is, if we look on some of these, we only got 11,988.
We should be getting 20,000.
We're not getting 20,000 in
$1.6 million loan. We should be getting 20,000 max branch margin, not like 8,000 to the loan officer and 12,000 to the branch. It should be 20,000 to the branch and 8,000 to the loan officer. That's a big issue.
Well, see, they're saying that this number here in column AA, that's what they're saying is a max of 20,000.
Column AA.
And then we're splitting it to the loan officer and then how much goes to branch.
Okay, so they're including
now,
LO
if you
margin
think about that, Holden, maybe what's happening is the other amount is going to the senior loan officer, and that's where we are capping out there. But the thing is, all the profits are going to the loan officer.
Okay, so I'm emailing him back and saying, does that include LO margin as well, or just branch margin? Because it looks like, so what you were saying, Denise, is that you're saying the combination of LO and branch margin is 20,000.
Yes,
But
if you look
think
over
about
in
it,
column
hold it,
AJ,
an LO
Yeah.
override is going to be part of the LO margin. So they're probably counting both the junior LO's commission plus the override to the senior loan officer as the total LO margin.
Okay.
correct. That
So
should,
that's
how
what's
it
causing
should
it.
be.
So that's what's
Mm.
causing, and that's why you're seeing a variance there. They're
No,
lumping the
no,
two together.
that's not true. That's not what they're doing.
Oh,
Where's
really?
They are taking the 1.22 margin, and which is the combination of the LO margin plus what is going to the branch. And they're making that 20,000. Look at column AJ.
Yeah.
Yeah.
See, I just did that.
Then that's a massive issue.
Now you're saying that
They're not
max
giving-
should actually be 28,000, 20 to the branch and 8 to the loan officer.
And then now the thing is, you're gonna have the override on top of the 8 to the branch manager. Who
So that would be
manage-
30 then, right? Is that
No,
what
no,
you're
no,
saying?
no, no. The 28 should be divided. Like if there's 28,000, it should be divided. It should be divided 8,000 to the LO. Then what? Let's say it's 31 basis points to the senior loan officer, and
Right.
then the remaining amount goes to the branch. That's what's happening right now. Now, I'm not saying that should happen continually in the future, but that's what is happening right now.
So we're making an adjustment to where with the override to the senior, the sponsoring LO, that it would not exceed 10,000 all in between the LO comp and that override. So for my understanding then, Denise, that would mean there would be 10,000 in branch margin and 10,000 in LO margin for a total of 20,000 combined.
That's what they're doing. Yes.
Okay. And when you say, just for clarification, when you say branch margin, do you mean, does that inclusive of LO margin when you use that phrase?
I do not.
Okay. Okay.
I am saying the branch margin. What is going to the branch?
Yep.
But on this worksheet where they have branch margin in column AA, that is all in. Branch or the branch margin, the loan officer margin, that's all in. And loan officer margin is going to the MLA, the junior, or the senior LO, which would be the three of you.
And all of those are adding up to 20,000 if you take column AF plus AH
Correct.
equals AJ. Okay. So if we look at it here, I mean, so that's why our total, like the higher the loan amount gets, our revenue is capped completely. So, okay, so that's why our rates supposedly get more competitive as the loan amount goes up, because we're not taking any additional revenue. Okay, so Hope, can you write down a question of should we raise the cap on our branch margin for jumbos? So I'm going to email them and ask them if we can. Okay, all right. Okay, it's helpful.
Now, looking at this, see your branch, you can see where your branch margin changed to from the 115. See, this one was on 311, was locked on 311. And then in May, this one was locked in May. So it changed to 1.3. See here in column I is your lock date.
Okay. And these loans, this worksheet, it looks like we have funding dates in July and June?
No, this should be just June.
Okay.
For funding dates.
Okay. Is column K the funding date or column J?
Yes.
Okay. Okay.
Yeah, I forgot to lock my top.
J
row.
must be the lock expiration date. Okay. All right.
Yes.
Okay.
Okay.
Okay. They came back and said that we can adjust our branch margins however we want, or the margin would go to our branch. So there is no cap. We can change it whenever we want. So I'm assuming the 20,000 was just a default that they put in, because I don't remember talking about that.
Is that something we
I
need to
think
ask?
we did, I think we did that to set like the pricing in a way that it would work.
Okay.
I don't like.
Hope,
Because the
Hope, can
thing-
you write down for us to research what was our branch? Do we have a cap on branch margin at Summit? And if so, what was it?
Would it have been part of that pro forma that Newton sent over from Vince originally, maybe? A decision we
No.
made? Okay.
Okay, so what I've done now is I've totaled the branch margin column, the loan officer margin column, and the plus minus par. And I'm just going to do a formula of those three totals. So when you go to your loan vision, that should be that $552,000 number right there. That should be what is showing on your P&L as yield spread.
Okay.
And I don't have access, so I can't tell you whether that number is right or not. If that number is not 552,000, then you have to investigate and find out why.
Okay.
So that's, I would go to the performance worksheet and do closed loans. It's thinking, sorry.
For what?
You said we were looking for that number, that yield.
You would go to your the intranet and you would go to Loan Vision. And in Loan Vision, you would go to your P&L for June.
Correct. Okay, it's trying to open.
Of course, Loan Vision is so incredibly slow.
Okay, and where would that number be?
In your P&L,
Did you get it up? Oh,
Mm-hmm. And I,
then you could probably share, well,
can you
see
share
that.
your screen again?
are you guys
yes, we
seeing
go
it?
to
Oh, there.
June, so we're at
here.
555. So we're close. We're at 555.
555 and mine was what?
553.
552. Did you close any bond loans?
Let's see here. Does it break? It doesn't look like it breaks it. We just have government and conventional. I'm sure, I mean, we easily could have closed one or two or something.
Yeah, that sounds like the margin on a bond loan.
Yeah. So now if you look down there where it says lender credit, see how we have like our yield spread, you know, discount income, all this, and then we have lender credit.
Yeah,
Now, that lender credit is not a PEP or a price exception. That is truly like a disclosure credit or something like that, right?
yep. Yep, it should be on that whole worksheet.
So the
Okay,
one
so-
thing that happens there though is if let's say we have to do a rate lock extension and we're not going to charge the client on that, then
Yep.
that becomes a lender credit and it does not fall into the PEP field.
Yeah.
So the thing
okay.
is, let's say we're going to cover a 2-week extension. That's technically would be PEP in our eyes, but it's falling in lender credit eyes. Now the
Okay.
thing is, we also get lender loan lock extension income listed on our P&L. So if we have a lender credit, let's say we do charge it to the client, and we charge them 15 bips, we are going to be giving them lender credit of 15 bips, but rate lock extension fee income of 15 bips.
Yeah. Okay.
Now, how
Um,
much did it show that you had for lender credits?
35,000.
So
30,
the
yeah.
lender credits showing on this worksheet is 34,819.92.
Okay.
So we're off $70.
Because it's interesting because there are, when I look at the lender credits and just, if you click on it and kind of scroll through,
Mhm.
I mean, there's one that's like $5,000. And there's a code
Well,
next
that
to
might
it.
be, let's say though, you're doing a rate lock extension on a $1 million loan for a week.
Yeah. Okay.
That could be, or a month. Like, I mean, let's say you have new construction and you've got to extend the rate lock 30 days.
Okay, I've got a $6,469 total lender credits, lender paid credit closing costs. And that was a $647,000 loan.
It's probably Olier. Pretty sure that was Soto's, and it was for our buddy Olier because he was doing new construction and we had to extend the rate lock.
Joseph Soto.
So
Ooh.
The borrower is Hollier.
Yep, that's him. So that's our buddy, and I think we charged him a portion of the rate lock extension. We did not, but we did cover a decent amount of it as well.
Would the rate lock extension have been the $14,000?
Prop.
We charged
that
all
might
of
have
that
been-
to him. You know, the below
Yeah.
par pricing.
Yeah. So I
So
think
you
instead
did
of
charge
doing,
him all of that.
instead of doing a PEP, we covered the extensions for him. So like instead of doing a pricing exception, we just covered his rate lock extension.
Got it.
Yeah.
Is
Got
it
it.
not possible, Denise, to click anywhere in Loan Vision and kind of get more detail on this particular line?
Not in there. No, you'd have to, that's the bad thing about everything. And that's why everything takes so long is because, okay, I've got a file number here. Now I have to go to this report to get the detail on it. Yeah, it's just
Okay.
ridiculous.
All right, I just wanted to make sure I understood. Thank you.
Yep. Now that
So
$5,000
yeah, I
is,
was wondering because I see down below, you know, we've got the lender credits of 34,893, and then we have rate extension fee income. How do you think about those two things? Like, should we offset those and look at the net of saying, okay, hey, we collected 24,000, but okay, so it's not necessarily as bad as the 35,000.
yeah, I
Yes,
mean,
it's-
when I put the P&L together, I have one line item that says plus minus par, rate lock extension income.
Yeah.
What's the other thing that I include there?
First lender credits.
No, lender credits I leave on their own line, discount points plus minus par and rate extension fees. I put that all
Yeah.
on one line because I think in my mind, at least, it's all netting the same charges basically are all being netted together with the income.
Yeah,
Am I-
because your pricing exceptions at the beginning when you lock the loan, plus the lender credits you give at the end of the loan are all your pricing exceptions.
Yeah,
However, they're put into two separate spots. So you have to account for it. So like the lender credit is added on top of whatever we gave in pricing exceptions to begin with, but also it's offset by if we collected rate lock extension income. So it's just like with credit reports where we have credit report expenses, but then we have credit report income. The net
Correct.
of that is our real true expense.
yes.
Okay. So when there's other miscellaneous income, it looks like when I click into that, it says referral expressway.
Yeah, that's the loans that have closed at corporate. Right? You refer them
Yeah.
because you're not licensed in that particular, your state, and so you refer it over to corporate and they close it and you get the 70 bips or the 50 bips, depending on your level of
Right.
closings.
Right. And so what I was wondering with that, because it looks like for us, it's a positive around 14,000. So the loan officer who referred it, from my understanding, gets commission. Is this branch margin that's coming to us, or is this?
That's the total. Part of that
Okay.
is branch margin, part of it is loan officer commission.
Okay. So, because what my concern would be is could it be that, hey, look, we're making 13,000, we think we're making 13,000, but under commissions, this loan officer is getting paid out these commissions. And if you subtract that, we could actually be taking a loss on referral stuff.
Yeah, but it does, you're not. I've checked
not.
it several times back
Okay.
and forth. And
Okay,
they're pretty
great.
good about it.
Good.
I mean, I
love,
think
I
you
love
get
how
100 and-
definitive you are on that you've checked
Yeah.
it out and you know. Okay, good.
Yeah. Oh, trust me, Mr. Ruby makes sure that I
That's what I
pick
love
up
about
on
Rick.
all of
He's very
those.
exacting. He's very
Yes.
exacting. So another thing I wanted to see, so if you'll notice under appraisals and credit reports, specifically appraisals, you'll notice that we have like a credit for the last 2 months. So I think what's happening is they're catching back up. Like the first time we got it, we had a heart attack because they had like $38,000. And so you can see them starting a credit. Well, that's great, but it's really hard to back into for that month. Like, what's our real net? So,
Yeah.
you know, what's the best way to think about it? Because right now we still have a cost of 22,000. If we average that over the 1, 2, 3, 4, 5 months here, that comes out to around, you know, $4,500 a month, which, you know, is higher than we would like to be, but
Which
maybe,
is bad. Like we didn't have
yeah,
22,000
I agree with
all
that,
of
Neil,
last year.
but I think what I'm wondering is, you know, if it continues to trickle in, like how long did it take you before the appraisal started getting cleared up?
Why would you be negative, or why would you have an expensive appraisals at all?
Great question. I mean,
It's corporate's mistake. It's corporate's accounting mistake. And they're slowly like giving us credits to get us back, but we're still in the negative 22,000, which is ridiculous because we collect on every single closing. Either they either are paying it with a credit card before the appraisal is done, or we're collecting it at the closing table.
Okay, and how many do you have that you didn't collect up front because you know you're going to collect it at the closing table and oops, they just decided to go somewhere else?
It's really hard to know, I think, because
But, I mean,
the
I'd say
reporting is so off.
2-3 a month, maybe. 2-3
So
a month.
2-3 a month, that's 2,000, 2,500 a month.
I mean, that should be more like 1,500, maybe 1,800.
So what I think the big thing, Denise, is like we really don't know. We're guessing, but we really don't have great data to tell us. And so it sounds like you didn't really run into this issue as much when you guys were getting started.
No, we didn't, because I keep a close handle on it.
Okay. So I
And
think we hope we
even-
need to write that down as something we need to really lean on corporate about and say, hey, look, this thing needs to get cleaned up right away. Because if Denise, they didn't have to go through this, there's no reason we should have to go through it.
Right. The way that I guess I would do that is, now you're saying year to date, it's still 22,000 in the red.
Yes.
Run a year to date P&L.
Yeah.
And get your data from that file or that line item,
Yep.
and then sort it by file number.
Okay.
And you'll be able to see which files were not collected on.
Okay.
You know what I'm saying? Put it into an Excel worksheet.
Yeah.
And you should see a positive number and a negative number for every single file that's closed. Now, whether it's it may not be in the same month. Are those in two different accounts collecting for appraisals? I don't think it is. You don't have an income account for appraisals
we
and then
don't.
an expense account.
We don't.
mean,
It's all one
we
line item.
lost-
So it takes the expenses and it takes it takes the debits and credits, and then it gives us a bottom, a net number.
Yeah.
It
Yeah.
shouldn't make sense to me because we had like 1 month, we had like $35,000 in uncollected appraisals.
Yeah.
No.
And then we've had, for 3 consecutive months, we've had a net like credit back to the branch because we were
Yeah.
we were at 45,000 negative on appraisals 3 months ago, and we've gotten credits, and now we're down to 22,000, but it's still 22,000 still is ridiculous to me. I think maybe we're at 6,000-7,000 would be like if we were just, somebody walked away and we never collected anything, but we're collecting on a majority of the loans. Like even on a transaction that dies, we're getting the appraisal covered.
Okay, this is very, very helpful. So you're saying run a year to date on that line item, and then we can tie out on each individual loan number.
Yeah.
Okay. And
Yeah.
do you know, where do we do that loan vision?
Yeah. Yeah.
Okay.
Do a P&L of multiple months and go to that one line item and just sort the report by loan number.
Okay. So we would just go to P&L report, like 6 month or 12 month.
Yeah. Yeah, because we're actually at 6 months.
Okay. And then you can export that to Excel on that, just that one line item.
Yep.
Okay, great. Okay, that's very helpful. Do you translate your reports into basis points? I know, or obviously you did on the margin, but do you do it for, I'm assuming you do that for expenses as well?
Yes.
Okay, awesome.
Yes. Mr. Ruby definitely wants to know how many basis points he has made every single month by branch.
And then do you do all those reports we got at Summit, like the, like I'm assuming you'll break it down of like the profitability of each loan officer, or
No.
you don't.
I mean,
okay,
you
don't go
can
that deep.
you can do that by just doing a if your loan vision is separated by loan officer, which mine is. I've got different cost center numbers for each one of my loan officers. And then all of their expenses go into that cost center.
And did you could just ask corporate to set that up for you?
Yes.
Okay. And so when you when you like, let's say now we have June P&Ls,
guys. Sorry.
June's P&L is done. What does Rick expect from you? Like, what do you turn into him? And when do you turn it in?
I turn in the core training P&L.
Yeah. Okay.
For each one of the branches. And then he looks it over.
Okay.
And if he wants detail on any one of the accounts, then I go through and I do detail for him also.
So he'll take it with a pen and he'll write and scribble
Yep.
on it? Okay,
Yep.
and then I'll hand it back. Great. Okay, Denise, thank you so much. This has been very, very helpful.
Okay,
So we recorded this, right? Okay, so we can at least look back through the recording and kind of see what you did to set it up. So we've got that, and then do you take it and then you transfer it into the core P&L format
Yes.
from there?
yes.
Okay, awesome.
Now, my next step would be finding out why there's a difference in the worksheet that we went through and what the yield spread is in the general ledger.
Okay, so could we set up another call just to kind of go through that portion? And then
Absolutely. I think that that's the next step here.
that would
Definitely.
be awesome. And then if
Yep.
I share my screen real quick, how do I did the P&L here, and
Hold on, I gotta
where
run, but I'll let you take it from here. Thanks so much,
Oh, thank-
Denise. Incredibly helpful.
Jackson, if you log off, we'll lose your recording, right?
I'll leave it open then. Okay.
Okay,
Okay.
thank you.
Okay, so Denise, I've got this right here. I did a 6-month P&L. Then if I want to go down to appraisals, what is that? Okay. Appraisal fees right here. Where do I click to get that
On the
detail you're
number.
talking? Right, just
On
should
the-
I just do for this one number, or do I scroll over to the?
Oh, it's got it. Does it have a year-to-date number?
I didn't. I think I just did 6 months. So if I go
Yeah,
back,
well,
and
6
then-
months would be year-to-date.
so should I just do year to date this one? Close
Yeah.
month. And then go over to the year to date one, click that. Hang on. And then there's an export button or something. Is that how you do it?
Yeah.
But
Okay.
when I did it, it didn't break it down by loan.
Hold on just a second.
That was my question too, Holden.
Yeah.
My laptop is almost out of juice and I didn't bring my charger with me. So if you lose me, that's why.
Well, so Denise, if you look here, see the appraisal fees, I go over to year to date as 22,000, but I can't click on that. I can click on
Oh.
these.
Oh, so you have to, I guess, do each.
Just do it
month
individually.
Yeah.
So if I click here, then this comes up, then I hit open in Excel.
Yep.
Okay. And so let's say download the, open up. And hang on. Can you see my screen still?
Yep.
Okay, great. Okay, so then we've got our GL account number, we've got our doc number. Okay, here's loan number right here.
Yep.
So then we've got the amount. So if we, assuming I could sort by loan number,
Yes.
and then that way it should have the credit and the debit next to each other.
Yes. What I would do is I would take and stack these. I would take like 1 month and then open up the next month and stack it on the bottom of the first month. And then just keep doing that until I've got all 6 months on one sheet.
Yeah.
And then I would sort it by loan number because there is definitely going to be timing differences between collection and payment of the invoice.
Okay. So, okay, so if I look here at this loan number, this top one, the ending in 1303, it looks like we got an appraisal fee payable amount, and then we have, it looks like a credit. So those tie out.
Are you looking at
Yes.
an Excel sheet, Holden?
Oh,
Yeah, can
yeah.
you not see it?
No, we
We're not
can't.
seeing the Excel.
Oh, okay,
Yeah.
sorry.
That's
Here,
all
let me
right.
show you real quick. So this one right here,
Thank you.
Oh, yeah.
these two. Okay,
Yep.
so if you, so see how there's an amount here payable, and then there, it looks like there's a credit.
Yep.
So it looks like those tie out.
Yep.
Okay, so that's what we would just do for each one of them. So
Yep.
let's say for 3406, it looks like there is a payable fee here of 85
But
bucks.
again, this is where you would stack.
And when you say stack, what do you mean stack?
I would put my January and
Well,
then I
this
would
is,
run
this one is all just June.
Okay,
Right,
so
so
then,
we'd have to go pull them, is what you're saying, Denise?
yeah, pull all of the months one at a time
Okay.
and then put them on top of, like, put all of your January's
Copy
and
and
Because
then
the
paste.
all of
bill
your
may come
February's.
in, because the bill may come in 1 month, but the payment comes in a different
Exactly.
month.
That's exactly what happens with appraisals,
So that's probably what happened with some of ours, is that we may have locked,
but
we did
not to
some
the
long.
tune of $22,000. That
Okay,
is
so there's gotta be some
ridiculous.
more. Okay, that's
And
perfect.
I've never been able to find the spot in Compass that shows where the deposits are showing.
Yeah.
Now, you may be able to see that because you collect those deposit numbers. I, as the accountant, cannot see those numbers, which is ridiculous.
Yeah, that's ridiculous.
And I went to my ops manager and I asked her the same thing, and she can't see it either.
Okay. So Hope, if we could write down to do that, and then what we could do is start tying it out that way. That would be super, super helpful. But Denise, thank you so much. I know we've gone way over on time.
That's
We
fine.
really appreciate your help. It's been super, super informative.
That's fine. And hope you'll give me a time.
Yeah.
Maybe-
Hope, do you mind just emailing Denise sometimes that will work?
Do you want to do it next week, Holden? Is that what you're thinking?
Whenever Denise is available would be great.
Okay.
Yeah, I
whenever
think that
works.
we need to get on this so that you guys can start
I
looking
agree.
at them.
So next week would be awesome
Okay.
Perfect.
if she can do it.
Yep.
Okay, guys. Thank you so much.
All right.
All righty.
Thank you.
Thank you.
Bye-bye.
Bye-bye.